Today I'm going to talk about market crashes and corrections and my way of getting through those. Last week the S&P 500 hit correction territory, which implicates a fall of 10%. Since it's very hard to predict how long it will take before the market bottoms and how deep it will fall, my way of getting through a correction or a crash is by not trying to predict any of those things. Some people make the decision to sell out of their stocks and try to buy back in for a lower price. The risk involved in this is that the market bottoms and you miss out on a large percentage of profits. My way of getting through a correction or crash is focusing on buying good companies that can face economic headwinds for a good price. By doing so, I avoid becoming emotional and panic selling my stocks. Instead, I invest time researching the companies so that I have enough conviction to keep buying when the stock price falls further to eventually increase my returns when the market flips the other way. One good example for me would be Meta. I started buying Meta in 2022 when the market was crashing. Even though the stock price kept falling, I kept on buying the stock because fundamentally this seemed like a sound company to me that would not go out of business. The stock price fell all the way to under $90 where I bought my last shares, and this is where the stock price capitulated. Right after the stock went on a beast tear and did a clean 8x from the bottom. If the stock didn't drop in 2022 and the stock price would have gone up way sooner, I would never have been able to buy for an average price of $120 and I would have made way less profits on this stock than I did now. I designed the following example to show you this effect. In both charts you see an example of a 12-month window in which you buy one share a month. If you look at both charts, you would probably prefer the right chart, in which the stock price is gradually going up and finished at a stock price of $140 per share, while the left chart shows a crash in the stock price and the recovery to $90 after the crash. Even though the stock price finished $50 lower, you would have made more profits with the left side example. This example clearly shows that being able to buy for a cheaper price can bring you higher returns in the long run. A common example that is used is, let's say you are out shopping. Would you rather buy jeans for $120 or the same pair of jeans for $60? $60, of course. People somehow can't understand this during a market crash. But if you are capable of doing so and you buy the right products then, you will be rewarded for your patience in the end. Like Warren Buffett once said, be fearful when others are greedy and be greedy when others are fearful. I also like to show you this picture of Rithol's wealth management that shows the market has gone through all kinds of reasons to sell over the years. Things like recessions, trade wars, viruses, you name it, and the market always returns to new all-time highs. This is why I do not worry about market uncertainty and I just keep on buying stocks for the long term. Of course, by buying individual stocks, there is a higher risk you pick the wrong ones that do not recover than if you instead are buying an index fund. In 2022, I made the mistake of buying some stocks that haven't recovered until this day. One example I can name is Polestar. This is why I am now avoiding most companies facing issues or those that are not yet profitable. That's it for today. Note that this is not financial advice. You can find the full disclaimer in the description. Please like, subscribe, and thank you for watching.